Hey everyone, how you doing? Once again, my name is Royce Wheeler. I am the owner of Tax Squad, and I want to personally thank you for joining our free tax prepare course. This course is for everyone, anyone available. You do not have to be part of Tax Squad to get this knowledge. If you want to join Tax Squad, you will have the ability to do so. We have plenty of time left before tax season. This class is not about data entry. It is more about ethics, due diligence, and making sure that we're doing everything correctly as preparers. A main part of tax prep, and as we go year by year, we have a lot of fraud, we have a lot of scamming. We have not been involved with anything in the manner, and we want to keep it that way. So when we educate you on these things, we expect you to uphold those, and we expect you to know that you were told these. We don't want anybody saying they didn't know, because everything that we're going to teach you today is going to be taught, and you have the opportunity to watch this recording over and over. All right. So what we're going to do is, like I said, we're going to introduce you to a few things. We're going to get started. This course is pre-recorded, so I will be in the comments for any questions that you guys do have. All right. Give me one moment so we can go ahead and get started. Right. And one of the things that we're going to start with is we're just going to start off with a list. I'm going to eventually pass this along to you guys. This is very important because as you become a tax preparer, you're going to be asked for this number a lot. All right. You're going to be asked for that main number a lot. So you can go ahead and jot that down now. But this is a number that they're going to want to find. And if they want to find a local office, this is here. So these two numbers would be very key. All right. They would be very key. And also here's some important dates as well for filing. Okay, here's some important dates. January 29th, tax filing season begins. So as a tax preparer, stuff like this is not when you start your taxes. What you would do is you would start preparing your taxes. You would put it in a queue in the software. And usually before the 29th, they start having test runs. They start doing little things like that. And then they'll start slowly accepting. And then once the 29th hits, you'll be able to see that everything that is good has been accepted. You will be able to give advances. You will be able to do all of those things before the 29th. That is just the date that the IRS officially accepts it. All right. But once you're signed on with the office, they will be able to inform you more on how you will be able to do advances and things in that manner. All right. Um, so what we're going to do is first thing we're going to start off with is we're going to start off with the basis of taxes, which is what is income. All right, this is pre-recorded, so this will be used with AI. This is some stuff that all of the knowledge is good. It just will be spoken by someone else. So once again, guys, I appreciate your support. I'm going to leave off the screen for a minute. All right, and give me one moment.
Rental in basic of taxes. Now let's uncover what income tax is. Income tax is the tax that individuals and entities pay on their income. It's one of the primary ways governments fund public services and infrastructure. This tax is generally calculated based on the total income earned over a year. For most taxpayers, income tax is automatically withheld from their paychecks by their employers. This process, known as withholding, ensures that taxes are paid regularly throughout the year. However, if you are self-employed, you are responsible for calculating and paying your own income taxes, often through estimated tax payments made quarterly. It's important to understand that income tax applies not only to your wages or salary but also to other sources of income. This includes 1. Investments. Profits from the sale of stocks, bonds, and other investment vehicles are typically subject to income tax. 2. Interest on savings accounts. Any interest earned from money deposited in savings accounts, certificates of deposit, CDs, or other interest-bearing accounts is taxable. 3. Rental income. If you own rental property, the income you receive from tenants is also subject to income tax. Each type of income may be taxed differently, so it's crucial to understand how these different income streams are treated under tax laws. Now, let's explore the concept of taxable income. Taxable income is the portion of your total income that is subject to taxes. It includes a wide range of income sources. Here are some key examples. 1. Compensation/wages. This is payment for services performed, typically reported on a Form W-2 if you are an employee. 2. Non-qualified scholarships and fellowships. These are amounts received that are not used for qualified education expenses, such as tuition and fees. 3. Capital gains. This refers to the profit made from buying and selling assets like stocks. Capital gains can be short-term or long-term, depending on how long you held the asset before selling. 4. Dividends. These are distributions of a corporation's earnings to its shareholders, typically reported on a Form 1099 DIV. 5. Bank interest. This includes interest earned on checking or savings accounts, certificates of deposit, CDs, and other interest-bearing accounts. 6. Self-employment income. Income earned from freelance work or gig economy jobs, like driving for Uber or delivering food for DoorDash, is taxable and typically reported on a Schedule C. 7. Gambling winnings. Any money you win from gambling activities is considered taxable income and should be reported. 8. Prizes and awards. Cash prizes, awards, and even the fair market value of non-cash prizes are taxable. And other income. This category can include various types of income such as rental income, alimony received, and any other earnings not specifically mentioned above. These are all taxable income, and it is important to understand for ensuring you report all your earnings accurately and remain compliant with tax regulations. How about who files income taxes? All U.S. citizens. Every U.S. citizen, regardless of where they live, is required to file an income tax return if their income exceeds certain thresholds. This applies to citizens earning income domestically or abroad. Everyone working and living in the U.S. Anyone earning income in the United States, whether they are a citizen, a permanent resident, or a non-resident, may be required to file a tax return. The requirement depends on their income level and filing status. Immigrant workers. Immigrant workers in the U.S., including those with green cards and those on work visas, must file income taxes on the money they earn while working in the United States. This ensures they comply with federal tax laws and regulations. U.S. citizens living abroad. U.S. citizens living outside the United States are still subject to U.S. tax laws. They must file a tax return and report their worldwide income, though they may qualify for certain exclusions or credits to avoid double taxation. It's important for everyone in these categories to understand their tax filing obligations to ensure compliance with U.S. tax laws. Lastly, let's talk about when taxes are filed. Tax year. The tax year in the United States follows the calendar year, starting from January 1st and ending on December 31st. This means that all income earned and expenses incurred within this period are reported on your tax return for that year. Tax return due date. Tax returns are generally due on April 15th of the following year. For example, for income earned in the 2023 tax year, the tax return would be due by April 15, 2024. However, there are some exceptions. Certain taxpayers, such as those living abroad, may have until June 15 to file their tax returns. Extension to file. Taxpayers who need more time to file their tax returns can apply for an extension. This extension gives them until October 15 of the following year to file their return. It's important to note that this is an extension to file, not an extension to pay any taxes owed. Taxes are still due by the original filing deadline, and interest or penalties may apply to any unpaid balance after that date. Understanding these deadlines ensures you file your taxes on time and avoid any penalties or interest charges.
Okay, once again, guys, if you have any questions, please leave those in the comments. I will be answering those. Hopefully that will be, that was a good recording just of the basic of taxes. We have plenty more to go, so I'm going to go ahead and start those. Like I said, if you guys have any questions, feel free to go ahead and ask me. Our next video is going to be on filing status.
because it determines your client's tax rates and the deductions you can claim. Understanding their options can help them maximize their tax benefits and ensure they're filed correctly. Let us guide you through the choices to find the best fit for your situation. Filing status is used to determine your filing requirements, standard deductions, and eligibility for certain credits and deductions. It influences how much tax you owe and which benefits you can claim, making it a crucial element in your tax return. Understanding and choosing the correct filing status helps you maximize your tax benefits and stay compliant with IRS regulations. The 5 filing statuses are single, S, married filing jointly, MFJ, married filing separately, MFS, head of household, HH, and qualifying surviving spouse. Let's go through them one by one. Hey there! Let's talk about when a taxpayer should file as single, S. A taxpayer must file as single if they meet these criteria. They were unmarried on the last day of the year. They are legally separated by divorce or a separate maintenance decree. They don't qualify for any other filing status. It's straightforward. If they are not married and do not fit into any other category, single is the way to go. Easy, right? Let's move on to the next filing status. Now, let's talk about the next filing status, head of household, HH. A taxpayer must file as head of household if they meet these criteria. They were unmarried on the last day of the year. A qualified child or relative lived with them for more than half the year. They paid for more than half the cost of keeping up the home. Filing as head of household can provide a higher standard deduction and lower tax rates. Let's move on to the next filing status. Next is married filing jointly, MFJ. A taxpayer must file as married filing jointly if they meet these criteria. The taxpayers are married. They are in a common law marriage. They are married and living apart but are not legally separated. The spouse died during the tax year and the taxpayer did not remarry before the end of the tax year. Married couples filing jointly generally have access to more tax benefits. When using the married filing jointly filing status, both spouses are equally responsible for the return and the taxes. Let's move on to the next filing status. Let's talk about married filing separately, MFS. A taxpayer can choose to file separately if they want to be responsible for their own tax liability. Find that filing separately results in less tax owed than filing jointly. This option can sometimes be beneficial depending on your client's situation. Filing taxes as married filing separately, MFS, can be helpful if they want to keep their tax responsibilities separate from their spouse, especially if they have debts or other financial issues. However, it usually means paying more in taxes and losing some benefits that they would get if they filed together. Here's the last filing status, qualifying surviving spouse, QSS. A taxpayer can qualify as a surviving spouse with a dependent child if they meet these criteria. The taxpayer was entitled to file a joint return with their spouse in the year the spouse died. The taxpayer did not remarry before the end of the tax year. The taxpayer has a dependent child who qualifies. The taxpayer paid more than half the cost of keeping up the home for the entire year. The qualifying surviving spouse status helps people who have lost their spouse by giving them some tax benefits. It means they pay less in taxes and get a bigger deduction, just like married couples, for up to 2 years if they have a child living with them. Let's talk about what a dependent is. A dependent is a person, other than the taxpayer or spouse, who qualifies the taxpayer to claim a dependency exemption. It's important to note that a taxpayer cannot claim a dependency exemption for someone who can be claimed as a dependent on another tax return. Knowing who qualifies as a dependent can optimize your tax benefits and help you file accurately. Lastly, let's tackle about a qualifying relative. A qualifying relative is someone you can claim as a dependent on your taxes. To qualify, consider their income, how much financial support you provide, and your relationship to them. Claiming a qualifying relative can offer valuable tax benefits. The right filing status, identifying qualifying relatives, and understanding dependents are important for maximizing your client's tax benefits and ensuring accurate filing. critical component of tax preparation. It is essential to comprehend these documents in order to file tax returns accurately and quickly. Now let's get started. First, let's talk about why tax documents are important. These documents serve as evidence of your income, expenses, and other financial activities throughout the year. They are essential for calculating your tax liability and claiming deductions and credits. Keeping these documents organized can save you time and stress when it's time to file your taxes. Here are some of the tax documents needed to file. First, have a government-issued driver's license or ID. This verifies your identity and helps prevent fraud. Next, gather Social Security cards for yourself, your spouse, and any dependents. These are crucial for reporting personal information accurately. Ensure you have Form W-2 from your employer. This reports your wages and taxes withheld. If you own a home, get Form 1098 from your lender. This reports mortgage interest paid, which can be deductible. Have a copy of last year's tax return. It helps verify information and carry over any necessary details. Gather your banking information for direct deposit of any refund. This includes your bank account and routing numbers. Next, collect documents related to retirement contributions, such as IRA or 401k statements. These can impact your taxable income. If you have health insurance through the marketplace, have Form 1095-A. This verifies your health coverage. Gather student loan interest statements. The interest paid can be deductible. Have proof for claiming dependents, such as birth certificates or school records. This is necessary for verifying dependent claims. If you're self-employed, collect business documents like income and expense records. These are essential for reporting business income. Lastly, ensure you have all relevant 1099 forms. These report various types of income, such as freelance work or unemployment benefits. Now that we've had an overview of the essential tax documents needed to file, let's take a closer look at what these forms actually look like. We'll review examples of each document to help you become familiar with their layout and key sections on the next slide. For instance, as you can see on this slide, the W-4 form is used by taxpayers to determine how much should be withheld from their paycheck for federal income taxes and sent to the IRS. Pay special attention to key sections such as personal information, the filing status, and the allowances claimed. Now that we've discussed the W-4 form, let's move on to the W-2 form. The W-2 form is a document that all hourly and salaried employees receive from their employer. It provides a basic outline of all income earned in the previous year, along with how much Social Security tax and income tax was withheld by the employer and paid to the IRS. Pay close attention to key sections such as wages, tips, and other compensation, as well as federal income tax withheld. The important sections to focus on include Box 1, Wages, Tips, and Other Compensation. Box 2, Federal Income Tax Withheld. Box 3, Social Security Wages. Box 4, Social Security Tax Withheld. Box 5, Medicare Wages and Tips. Box 6, Medicare Tax Withheld. Boxes 15 to 20, State and Local Tax Information. Next, let's take a closer look at the 1099 form, which is used to show other income not produced from a W-2. There are several common types of 1099 forms, each serving a specific purpose. Some important 1099 forms include 1099 MISC, Miscellaneous Income, for reporting various types of income such as rent or payments to independent contractors. 1099G, Unemployment Compensation and certain other government payments. 1099 NEC, Non-Employee Compensation, used to report payments made to independent contractors. 1099 INT, Interest Income, for reporting interest earned on investments or savings accounts. 1099 are distributions from pensions, annuities, retirement or profit-sharing plans, IRAs, and insurance contracts. 1099K, payment card and third-party network transactions, for reporting income from payment cards and third-party networks. 1099 MISC form, which is used to report miscellaneous income such as rent, royalties, and payments to independent contractors. The important sections to focus on include Box 1, Rents, if you received rental income. Box 3, Other income, for reporting miscellaneous income not reported elsewhere. Box 7, Non-employee compensation, which is crucial for independent contractors. Box 10, Gross proceeds paid to an attorney. Box 15, State tax withheld, for any state income tax withheld. Boxes 16 to 18, State and local income, which provide additional tax information at the state and local levels. 1099-G form, which is used to report certain types of government payments, such as unemployment compensation. The important sections to focus on include Box 1, Unemployment compensation, which shows the total amount of unemployment benefits received. Box 2, State or local income tax refunds, credits, or offsets. Box 4, Federal income tax withheld, which indicates any federal tax withheld from your payments. Box 10A, State, identifying the state issuing the payment. Box 10B, State identification number, specific to the issuing state. Box 11, State income tax withheld, showing any state tax withheld from your payments. 1099 NEC form, which is used to report non-employee compensation, such as payments to independent contractors. The important sections to focus on include Box 1, Non-employee compensation, which shows the total amount paid to independent contractors. Box 4, Federal income tax withheld, indicating any federal tax withheld from these payments. Box 5, State tax withheld, showing any state tax withheld from the payments. Box 6, State/payer's state number, identifying the state and payer. Box 7, State income, which reports the state income related to the non-employee compensation. Whoa, it's been a lot. Let's have a short break and see you in the next part of this video. 1040-SR form, the most common income tax return for seniors. Form 1040-SR is available as an optional alternative to using Form 1040 for taxpayers who are age 65 or older. It uses the same schedules and instructions as Form 1040. Host, the important sections to focus on include Section 1, Personal information, where you enter your name, social security number, and filing status. Section 2, Income, which includes wages, interest, dividends, and other sources of income. Section 3, Adjusted gross income, where you subtract any adjustments to income, such as retirement contributions. Section 4, Tax and credits, which calculates your total tax liability and any credits you qualify for. Section 5, Other taxes, including self-employment tax and additional taxes owed. Section 6, Payments, showing how much tax you have already paid through withholding or estimated payments. Section 7, Refund, indicating if you will receive a refund. Section 8, Amount you owe, showing if you have any remaining tax liability. Form 1040-SR features larger print and a standard deduction chart, making it easier to read and use for seniors. At the end, it will show if a taxpayer owes taxes or will receive a refund. 1040-ES form. This form is used to figure and pay your estimated tax. Estimated tax is the method used to pay tax on income that is not subject to withholding, such as earnings from self-employment, interest, rents, and alimony. The important sections to focus on include Section 1, Personal information, where you enter your name, social security number, and address. Worksheet, this is used to calculate your estimated tax payments. It includes fields for Income, reporting all sources of income, such as self-employment earnings, interest, rents, and alimony. Deductions and credits, subtracting any applicable deductions and credits to determine your adjusted gross income. Tax calculation, figuring the total tax due based on your income and deductions. Payment vouchers, these are used to submit your quarterly estimated tax payments. Each voucher includes due date, the specific date when the payment is due. Amount, the amount of estimated tax payment you need to make. Understanding these key sections will ensure you accurately calculate and pay your estimated taxes throughout the year. 1040-NR form. You need to file Form 1040-NR if you were a non-resident alien engaged in a trade or business in the United States, represent a deceased person who would have had to file Form 1040-NR, or represent an estate or trust that had to file Form 1040-NR. Host, the important sections to focus on include Section 1, Personal Information, where you enter your name, taxpayer identification number, and filing status. Section 2, Income, which includes wages, salaries, tips, and other income earned in the U.S. Section 3, Adjusted Gross Income, where you subtract any adjustments to income, such as contributions to retirement accounts or business expenses. Section 4, Tax and Credits, which calculates your total tax liability and any credits you qualify for. Section 5, Other Taxes, including self-employment tax and additional taxes owed. Section 6, Payments, showing how much tax you have already paid through withholding or estimated payments. Section 7, Refund, indicating if you will receive a refund. Section 8, Amount you owe, showing if you have any remaining tax liability. That's a wrap on the common tax documents. Having a good grasp of these documents will make your tax filing process smoother and help ensure that you don't miss out on any deductions or credits. Mastering these essential tax documents is crucial for providing accurate and efficient service to your clients. Thank you for joining us today. In our next session, we'll cover tax filing status, so stay tuned.
All right, y'all. I'm sorry I was muted. Um, but once again, that's another section that we had to that we will have to deal with. A lot of this stuff that you're seeing will be data entry and will automatically be filled out for you. But we want you to also have that knowledge just in case you have to send anything off on paper, if you ever see any errors, anything like that. Once again, if you guys have any questions, just ask in the comments on YouTube. Um, I will also be dropping some comments in there, kind of to emphasize when they're talking. So just pay attention to those. Once again, we will take a 10-minute break after the fifth section. So I'm gonna go ahead and get this next section started, which will be the basics of taxes, the schedules of the 1040. All right. So once again, I'll see you guys in a few.
The schedules of Form 1040, which provide detailed insights into various types of income, deductions, and credits. Let us now go to Schedule A of Form 1040. It is the form that the taxpayer used to figure their itemized deductions. In most cases, a federal income tax will be less if the taxpayer takes the larger of their itemized deductions or their standard deduction. Itemizing deductions involves listing various eligible expenses to reduce taxpayers' taxable income. Some of the key categories your client can report on Schedule A includes medical and dental expenses, taxes that your client paid, interest that the taxpayer paid, gifts to charity, casualty and theft losses, and other itemized deductions, like miscellaneous deductions such as gambling losses and unrecovered investment in a pension. Itemizing can be beneficial if the taxpayer's total eligible expenses exceed the standard deduction. For example, if you have significant medical expenses, high mortgage interest, or substantial charitable contributions, itemizing may reduce your taxable income more than the standard deduction would. It's important for the taxpayer to keep thorough records of all their expenses throughout the year to accurately complete Schedule A and maximize their deductions. Remember, choosing the larger of the taxpayer's itemized deductions or the standard deduction can significantly impact their overall tax liability. Let us now go to Schedule B of Form 1040. It is used to report certain types of income from interest and dividends. Let's have the first one, taxable interest over $1,500. If a taxpayer earned more than $1,500 from interest, like from a savings account or CDs, they need to report it on Schedule B. Next, ordinary dividends over $1,500. if a taxpayer received more than $1,500 in dividends from stocks or mutual funds, they also need to report this on Schedule B. Then, seller-financed mortgage, if a taxpayer sold a property and financed the sale themselves, meaning the buyer is paying them interest directly, and the buyer uses the property as their home, this interest income should be reported on Schedule B. Next, accrued interest from bonds. Sometimes, bonds accumulate interest that hasn't been paid out yet. This accrued interest must be reported on Schedule B. Lastly, nominee interest or dividends. If a taxpayer received interest or dividends on behalf of someone else, they need to report the full amount they received and then deduct the portion that belongs to others. Remember, keeping detailed records of all interest and dividend income throughout the year will make completing Schedule B much easier. Let us now go to Schedule C of Form 1040. It is used to report income or loss from a business you operated or a profession you practiced as a sole proprietor. If a taxpayer is self-employed, they need to use Schedule C to report all their business income and expenses. This includes business income and business expenses. Why use Schedule C? First, calculating profit or loss. By listing all income and subtracting all expenses, Schedule C helps the taxpayer determine their net profit or loss from their business. And second, tax reporting. The net profit or loss from Schedule C is then transferred to Form 1040, which affects the taxpayer's overall income and tax liability. Remember, maintaining detailed and organized records throughout the year will make completing Schedule C much easier and ensure that all income and expenses are correctly reported. Let us now go to Schedule D of Form 1040. It is used to report various types of capital gains and losses. Here's when to use Schedule D. Sale or exchange of a capital asset. This includes items like stocks, bonds, and real estate that are not reported on another form or schedule. Gains from involuntary conversions. If a capital asset is converted involuntarily, other than from casualty or theft, and is not held for business or profit, it must be reported here. Capital gain distributions. If the taxpayer received capital gain distributions that are not reported directly on Form 1040, they need to be included on Schedule D. This also applies to effectively connected capital gain distributions not reported directly on Form 1040 NR. Non-business bad debts. If the taxpayer has non-business.
All right, guys, something I want to go ahead and throw out there. The Schedule C is something that you'll commonly run across. It is for businesses, those who are self-employed, doing things of that manner. So that's something I want to throw out there. Let me kind of go back a little bit on it, actually. Let me see. Let's go back on that Schedule C. So yeah, this is mainly for for those who are self-employed income. A lot of those other schedules will kind of manually be filled out for you, but the Schedule C is mainly one where you want to you really want to have a breakdown of what your client is doing. You want to possibly have a copy of the Schedule C to send to your client and let them know, like, hey, I need all of these expenses and I need to know all the final numbers for these expenses so I can go ahead and enter that. Not only will this help you out time wise, but it will help the client out with charging, because if you walk in and I have to take all of this time and you're not prepared, I'm going to charge you more. So this is a big part of customer service when you're doing tax repair. It's not all of it is about getting over on the client. This is something that we want to build a book of business on. We want to be doing this for 30 years. We want to, when we're 50, 60 years old, or we're retired or whatever, we want to say, hey, we got all of this side income coming in because we have a large book of business, because we have good customer service and we know how to service our clients. All right. So I'll go ahead and continue back with the Schedule C.
Income and expenses. This includes business income and business expenses. Why use Schedule C? First, calculating profit or loss. By listing all income and subtracting all expenses, Schedule C helps the taxpayer determine their net profit or loss from their business. And second, tax reporting. The net profit or loss from Schedule C is then transferred to Form 1040, which affects the taxpayer's overall income and tax liability. Remember, maintaining detailed and organized records throughout the year will make completing Schedule C much easier and ensure that all income and expenses are correctly reported. Let us now go to Schedule D of Form 1040. It is used to report various types of capital gains and losses. Here's when to use Schedule D. Sale or exchange of a capital asset. This includes items like stocks, bonds, and real estate that are not reported on another form or schedule. Gains from involuntary conversions. If a capital asset is converted involuntarily, other than from casualty or theft, and is not held for business or profit, it must be reported here. Capital gain distributions. If the taxpayer receives capital gain distributions that are not reported directly on Form 1040, they need to be included on Schedule D. This also applies to effectively connected capital gain distributions not reported directly on Form 1040 NR. Non-business bad debts. If the taxpayer has non-business bad debts, these need to be reported on Schedule D. It's essential to keep detailed records of all transactions involving capital assets, including purchase and sale dates, amounts, and costs. This makes completing Schedule D much easier and ensures accuracy. Let us now go to Schedule E of Form 1040. Use Schedule E, Form 1040, to report income or loss from several sources. First, rental real estate. If the taxpayer owns property and rents it out, the income and expenses from that rental property are reported here. Second, royalties. Income from royalties, such as from intellectual property or natural resources.
This is a section right here that's a little common also. If you get some people that are landlords that own that are currently renting out, Schedule E is something that you're going to want to use. It is not a hard form. You want to make sure that they're tracking their expenses, they're doing all of those things. But one thing about these schedules also is, as you go on in your tax preparer career, you want to really get experience with these schedules, get mentorship with these schedules, maybe even practice, create some dummy returns in the system so you can practice these schedules and see how it would affect someone who has a W-2 or things like that. We're going to have a lot of, possible scenarios starting in December when we do our weekly calls. But Schedule E is something that, you're going to run across those clients who just own some property. They own one property and it may just be renting it out. You know what I'm saying? So just always stay abreast of that.
Resources is also reported on Schedule E. Third, partnerships and S corporations. If the taxpayer is a partner in a partnership or a shareholder in an S corporation, their share of the income or loss from these entities is reported here. Fourth, estates and trusts. Income from estates and trusts is included on Schedule E. Fifth, residual interests in REMICs. If the taxpayer holds residual interests in real estate mortgage investment conduits, REMICs, any related income or loss is reported on this schedule. Maintaining detailed records of all income and expenses related to these activities is crucial. This includes rental agreements, receipts for expenses, and Schedule K-1 forms. Let us now go to Schedule F of Form 1040. Use Schedule F, Form 1040, to report farm income and expenses. This schedule is essential for farmers to detail their earnings and the costs associated with running their farming operations. What to report on Schedule F? The taxpayer should report first is the farm income like sales of livestock, produce, grains, and other products, cooperative distributions, agricultural program payments, crop insurance proceeds and federal crop disaster payments and custom hire income. Second is the farm expense like car and truck expenses, chemicals, conservation expenses, custom hire, machine work, depreciation and Section 179 expense deduction, feed, fertilizers and lime, freight and trucking, gasoline, fuel and oil, insurance, rent or lease, repairs and maintenance, seeds and plants, storage and warehousing, taxes, utilities and veterinary, breeding, and medicine. It's essential to keep detailed and organized records of all farm income and expenses. This includes receipts, invoices, and financial statements. Lastly is the Schedule H of Form 1040. Use Schedule H, Form 1040, to report household employment taxes. This schedule is necessary if you paid cash wages to a household employee and those wages were subject to Social Security, Medicare, or FUTA taxes, or if you withheld federal income tax. The taxpayer can use the Schedule H in cash wages to a household employee, federal unemployment tax, FUTA, and federal income tax withholding. Maintain detailed records of all wages paid to household employees, including the dates of payments and amounts, as well as any taxes withheld. This will make completing Schedule H much easier and ensure accuracy. And that wraps up our overview to the schedules of Form 1040. As a tax professional, understanding these schedules is important for accurate and thorough tax reporting. Stay diligent, and you'll help your clients maximize their benefits and stay compliant with tax laws.
Like you said, y'all, and sorry I'm on mute. Um, it's very diligence is very important. So what's going to happen is you want to make sure that you're doing this accurately. And one of the main reasons why some of these clients are going to receive letters. All right, they're going to receive letters saying, hey, they may have had this error in the tax return, and you're going to have to do what you're going to have to do is you're going to have to correct these errors because this client may not have gotten paid yet. In order for you to get paid, these errors need to be corrected. So you want to make sure that you're doing things right by when you're doing these schedules, making sure that it's not just round numbers, 1,000. It's very unlikely that somebody just spends $1,000 flat, no change, no nothing, no extra dollars on it. All right, we want to make sure that we're doing those type of things as accurate as possible. Everything's not going to be 100%, but as accurate as possible. Okay, learn these schedules, become an expert in these schedules because there are a lot of fly by night preparers who don't know what they're doing. I get a lot of clients to fix errors from other preparers. Light bulb, you know what I'm saying? So just keep that in mind, family. We're going to do one more section, then we're going to take a break. Once again, put your questions in the comments on YouTube. Give me one moment. And actually, what we'll do is we're going to go ahead and take a break now. Our next section that we're going to be going over is going to be, sorry about that, y'all. But once again, our next section is going to be on Circular 230, and it's going to be on ethics. But once again, during the break, if you guys want to send me any questions in the comments, if you guys want to email me, this is pre-recorded, so I am watching. So if you guys want to email me, I'll go ahead and put my email up here. Give me one moment so you guys can email me. This is .co, so make sure that you please put that. Please, one of the main things about taxes too is paying attention. I really, really stress for you guys to pay attention. I really, really stress for you guys because you're going to be stressing that to the people that you're talking to and you're guiding them so they can do things better. All right. So once again, I'm going to end this video here. We're going to take a 10-minute break. All right. And I'll see you guys in the next section. All right, y'all. Also, just to let you know, if you guys see that this has ended, what that means is we're just taking a break. I'm going to come back with a whole new recording. All right, I'm going to drop a whole new recording in about 8 minutes. So just stay tuned, stay on the YouTube page, and we're going to go ahead and drop that new recording. All right. I'll also place the new recording link in the group. So if you guys can't reach it, so make sure you guys cut your notifications on for the group, and make sure you guys cut your notification on for this YouTube page as well. All right.